Hey friends, Julie Gualandri here with the JulieG Homes Group at Austin Portfolio Real Estate with your Real Estate Minute for February 2024. Hope everybody enjoyed Leap Day. I'm coming to you on March 1st. The year is trucking on by just like they all do. And we sit on the edge of our seats just waiting to see how this spring selling season is going to go. I've just come off of the Keller Williams family reunion where we get a full download from Keller Williams' own economist about the housing market and all the trends. And I have to say I agree with all of the things that they said. Really our industry comes down to two things: supply and demand. And currently, as we've discussed many times at this point, supply is low, and you know what? Demand is also lower than it should be because interest rates are higher than everyone would like. So that is the long and the short of it. I think this year is going to be punctuated by changes in interest rates, and it appears after 12 months of observation that as we get above 7% in interest rates, buyers get disinterested or fearful of that. And they say, it's too much, I'm not doing it. And then they sit on the sidelines. So I think I talked about this a little bit last month, but in December, rates were headed down toward 6%. And it was the holidays, so everybody had enjoyed their holidays. And the minute it became January 1st, people sprinted out into the market. A couple of my sellers were the beneficiaries of that. We had multiple offers. Things felt like they were getting back to normal. And then the jobs reports came in, and unfortunately the economy was still creating jobs at too fast of a pace. Wage inflation was still kind of working its way through the economy. So people making more money and people getting jobs should be considered a great thing. However, if you're the Fed, it was not. It meant that the economy was not cooling as they had intended. So all of the plans to reduce interest rates at the Federal Reserve level kind of went on ice. So everyone had sort of been expecting that in March there might be the first rate cut in a couple of years. Instead, everyone believes there will just be no action taken, which isn't really great for the market either. So what is someone to do? Well, if you need a house, you should start looking at buying a house. Rates, you can always refinance, and it feels like, I am in no way in charge of interest rates, but I don't really see an economic situation forming that would cause rates to spike. I could be wrong, but all the numbers seem to be coming in, and we should be headed for some kind of lower than where we are now rate environment to happen at some point. So I wish I had a crystal ball, but anyway, I believe that what will happen is once rates do traverse down into that low sixes and even lower than that, then we will have full buyer attention, full buyer interest, and then we will still be faced with low inventory because there's tons of people with mortgages at well below the sixes and even the 5% range. So that is the setup. I am here to help you with whatever you need help with. I hope this has been helpful, and I will talk to you next month.